What's up, disciplined investor?
We got Benzinga CEO Jason Raznick here with us.
The man, the myth, the legend, Tom Nash.
Peter Schiff on the Power Hour with us live today. Interesting, different, unique, innovative companies. Mia, you are live with us on the Power Hour. What's up?
Thank you so much for inviting me on.
Jessica Billingsley, that is the CEO of Akerna, the best trade idea resource out there. Yo, oh my God, that was a rough start. What's going on, everybody? Happy Thursday. Woo, we are back at it. We are starting the Power Hour. All right, this is the Trade Idea Show. This is where we're going to get the ideas flying. I've got a list of symbols on my sheet right now. We're going to start off with everybody's favorite fad trade of the year. So if you're into the fad trade, we're going to start there. Then I have Roblox, Palantir, Tiger Brokers on my list right now. Giving you a quick rundown of what is to come. Two public companies joining the Power Hour today. All right, so we got two. First one, ticker GROM. It's like the Instagram for kids. Super interesting company. That's going to be getting going at 12:10, so just a few minutes from now. And then we're going to be taking some ideas out of the chat. All right, how does that sound? Good. Can I get some confirm? There's a couple confirms. All right, I'll take it. All right, guys, throwing the screen up, throwing my screen up there. All right, check it out. I said we're starting off with everybody's favorite fad trade of the year. Look at this one, ticker YVR, Yankee Victor Romeo. Why does this name sound familiar? This is because it was one of the NFT plays. All right, I haven't seen anybody talking about this one yet, so that's why I'm throwing it on everyone's radar. The NFT trade is potentially back. We have Liquid Media Group. Again, guys, the ticker YVR is up 42.5% today on no news. Volume is exploding, of course. And we are seeing some action out of the other NFT names. Nothing crazy like what we're getting out of Liquid. But we've got Dolphin up a little bit. HOFE is up a little bit. So here's the play on it, I think, is if you want to try to get into some of this action, right? Again, you've got Liquid Media is now up 43.5% on no news. It was one of the NFT high runners. If we pull it back, here's the daily chart, 1 year chart, daily candles. You see what the price action that thing had. I think it's worth at least taking a look at the other NFT stocks. I'll read down a list of the symbols in a second here, and potentially if you want to scoop a couple of them up, and see, hey, maybe there's a little bit of follow through. There's maybe somebody else figures out this correlation and they get moving again. I see one in the chat, ticker TKAT. This one is up 23% today. This is 1 year chart daily candles. If I zoom it into 2 days, you can see the thing is exploding today. So guys, I would be getting in on this trend. I'm not just because I don't have I can't monitor them for the rest of the day. I'm getting on a plane later today, so I won't be able to monitor the rest of the trades. But basically, again, all the NFT stocks are at some sort of exposure, some sort of risk where they could potentially get going. The YVR that's leading the pack today. You've got TKAT that's up 22.5%, and there's still a lot of these NFT stocks that are yet to move. So if you want to get in on some of that action, here are the symbols. You got HOFV, TAOP, GRNQ, and DLPN. Those are the other big NFT stocks. And who knows? Maybe they start to catch a little bit of energy. But all right, there's first item on our agenda today, guys. I'm buzzing down them. We're going to try to do 5 stocks, 5 minutes. Starting us off, NFT plays. There's the first idea for you. Next, we're going to Roblox. If you guys recall, RBLX, and we'll make this chart bigger in a second here. Roblox was coming up to a major level yesterday. So when we were looking at the stock during this show yesterday, the price was somewhere right around here, right around $80. And we called out this level. We had this low here, and then we had this cluster of highs. Basically, the thinking that we were bringing into the stock, at least for the sake of a swing trade, was that can the stock hold that $78, $79 level? If it can hold that level, the thinking was, okay, that's an opportunity where I, in my account, I was going to hit it long and try to play it off of a swing trade until earnings. Probably not through earnings, but at least until earnings. Today, we are not getting that bounce. Stock is continuing to sell off, which is why I absolutely do not front run these things. I want to see some of the energy flow first. And so today we're seeing some of that confirmation that the stock's fallen through these highs. We're sitting right at a low of the day in Roblox. So be careful if you're in it. I'm not taking the long side. I was hoping that we'd take a look at the chart today. We'd see some of that energy pushing higher off of those levels. It's not. So I'm sitting on the sidelines with Roblox. So boom. And we're seeing some concern in the chat that we didn't get moved over. That sucks. From SPAC's attack. When you guys have problems, tell us. Right? We're not trying to make your lives easier. Every day we work pretty damn hard here because we're trying to make your lives easier, not harder. Okay? So when you have issues, you have problems like that, you are empowered to tell us. You have the chat. You have our email address. It's powerhour@benzinga.com. powerhour@benzinga.com. When stuff doesn't work, you don't get moved over. Call it out. Let us know. And we'll work on getting it fixed for you. All right. So producer Rohan, I'm punting this one to you. The move from SPAC's attack to Power Hour didn't work. Let's get this fixed for the viewers. And again, guys, we're running rapid fire today. Okay, we have a lot to get through. We just talked about the NFT plays. I think there's potentially some action to be had in the NFTs. We'll come back to those at the end of the show. We talked about Roblox sitting on the sidelines there. Before we get to our first public company interview of the day, let's knock out one more ticker PLTR. I saw somebody say, are there any options plays? I have an options play for you guys, okay? If anybody was paying attention yesterday, we took a look at this one, Palantir. We hadn't talked about the stock in a while. Palantir has been stuck in this sideways range for going on 5 months now. This makes it a great put selling candidate. Okay. When we sell puts against the stock, it makes us long. There's two things that happen when we sell the puts. Okay. The first thing is we get credit to our account immediately right away. The second thing that happens when we sell the puts against the stock is that we take on the risk of potentially buying the stock at whatever the strike price that we sold the puts for. So Palantir moving sideways. It's a stock that I'm okay owning for the long run. I want to get a little bit of premium here. My portfolio has been going sideways for the past couple of weeks. Let's use this as an opportunity to collect a little bit of capital. And again, if I have to own shares of Palantir for, let's call it $19 a share is what I'm going to look at. Absolutely okay doing that. But we might not, our option chain might just not load. Damn. We're going to have to come back to the Palantir. So shout out to Christian Gallagher. Does love selling puts on Palantir in the chat. So all right. My option chain isn't loading. It is also time for our next guest. So I guess what we're going to do, the move we're going to make is we're going to get clip into our first public company interview of the day. And then after that, we're going to try to take a crack at this option chain again and see if we can get an option chain to load. I wanted to make a live trade for you guys in my brokerage account. But look at this. I don't even get the option button. So hopefully later on in the show, we'll be able to get back to that. And guys, I'm going to throw the call to action out there. Share the stream, like the stream. We are flying today. We're moving fast. I even got some nice new graphics for you guys. Check this one. All right. Without further ado, let's go ahead and bring GROM onto the stream. Super interesting public company. I'm guessing it's the one that a lot of people don't know. So let's go ahead and bring our guests on. And of course, guys, smash that like button. All right. Paul, Darren, welcome to the Power Hour. We are excited to have you guys here. It's absolutely an interesting product. It's an even more interesting company. So I appreciate you taking the time out of your days to join us on the Power Hour here.
Thanks for having us.
Thanks for having us. Yep, appreciate it.
Absolutely. So I guess, but before we dive into it, and I've got a slew of questions I'm looking to ask. For anybody who isn't aware or familiar, can you just give us a little bit of background on GROM?
Sure. So GROM began as a social media company that was designed for kids under the age of 13. Kids under 13 are not supposed to be on TikTok, Instagram, Facebook without their parents' permission. And the reason for that is those companies can't guarantee the safety and security that COPPA compliance demands. So the Children's Online Privacy Protection Act. What GROM did was they established a social media opportunity for kids where they can engage with other kids in an environment that allows their parents to supervise controls as well. So kids can get an onboarding experience into their very first social media experience.
Okay.
So that's our core business. And then we have other businesses as well. We have a net-spective web filtering solution, which is something that we sell into school systems that allows that prevents kids using school internet services and things like that from wandering off wherever they like. And we also have an animation studio in the Philippines called Top Draw Animation. And basically what we do is we have 450 top shelf animators that are animating series for like some of the biggest players in the world in terms of animated entertainment. And we recently embraced another division into our company, and that is a company called Curiosity Inc. Media. And what we like about Curiosity is they are all original IP. So they're bringing original storytelling content that can be realized in feature-length films, original series, publishing, a number of revenue potential driving opportunities.
So there's a lot of pieces of the business. Help me wrap my mind around how they all play together, or from an investor perspective, which ones are most interesting to be paying attention to?
I think, Darren, if you want me to take that, I fundamentally believe like the two most interesting out of the four, I think, right at this moment are the social media and also Curiosity Inc. Media. I'll start with GROM Social. In terms of social, Facebook and it's recently announced that they were dipping their toe into Instagram for kids, and that led to like a lot of there was a lot of news and excitement around that, and there was also a lot of pushback against that. And the hoopla really centered around the idea that historically, a lot of people feel like Facebook has not done a very good job of protecting kids in that environment. What we like about that is directionally that we think that this leads social media to design social media for kids that follows the GROM model. So we think that that really gives us a nice leadership position, and we know that Instagram going into social media, Nickelodeon, and it's part of what drew me to this company in a big way is all of this amazing original IP. We announced, for example, we're in development on a series called Baldwin. It's a preschool series that we think, if we do it right, it has the potential to be a Dora the Explorer or a Paw Patrol. And these things are not just hits on linear television. They're hits, domestically and globally, consumer products, licensing, merchandising, and, even like live theatrical. So there's a lot of different places that we could take GROM using some of this IP. And Baldwin's just one of the examples. So if you ask, if I were an investor, which areas would I focus on? It would definitely be Curiosity Inc. Media, which, by the way, is headed up by my pal Russell Hicks, who was head of live action and animation for Nickelodeon, and has a deep career at Disney, Hanna-Barbera, and Turner as well. So we're a boutique operation with a deep bench of talent.
Okay, and so. Sorry, Darren, go ahead.
No, I was saying well put. And the other thing I might want to add too is when you look at the current market environment and the streaming services and the demand for IP, original content, we've put ourselves in a story with having 2.4 million active users on our GROM platforms. That's platform wide, including parents. So you can start to translate a multiple of user value. We see that we're severely undervalued in that side of it. And then when you go and look at the demand for IP, we can vet products, content through our platform, bring it to the big mass media companies, partner with them, create for them, scale it on our platform for them. So we feel we're very well positioned, not only where the industry is currently, but more importantly, where it's going. So I think that's really what Russell and Paul saw, was how well positioned we were to take advantage of all this growth.
Excellent.
That's right. Sorry. I was going to say, we also see great opportunity for synergy here. So if you look at synergy, we also announced recently that we were going into we're going to start dropping published content with a partner called Dynamite Publishing. Well, one of the things that they have is really red hot graphic novels. When I was a kid, they were comic books. Now they're these really like graphically rich, deep storylines, sometimes 180 pages long, that are great storytelling opportunities. Well, using content that we get out of Dynamite, we see as a great synergy opportunity to promote literacy and help move the books among GROM social users, in addition to other platforms. But I think that there's so many possibilities of where we're going to be able to take this company. I just returned from Florida last night. We had a great meeting, with the whole new crew, and because it's a very new company. I started here in early March, and the company it's seismically different than it was like 4 months ago. You might want to come back and look at us in January, because it's going to be even more different.
Awesome. So I've got a couple of follow-up questions on the social network. And again, guys, for anybody just joining us, the company is GROM, ticker GROM. I want to lead with the social network for the under 13 crowd. Can you talk about some of those safeguards that you put in place, and how do we keep our children safe while they're using the platform? I'm guessing that's top of mind for all parents, close to all parents who would put their kids there.
Sure, Darren. Darren, if you want to chime in, first of all, we have 24-hour monitoring, we have live monitoring, and we've got all sorts of algorithms that intercept like harmful language and abusive language and bad content that will intercept it from getting to other kids. But the main thing that we really do is we invite parents to play a very active role. Now, for parents that are too busy and don't have time to do it, guess what? Your kid's still going to be safe. But for parents that want that assurance, there's all sorts of controls that you can go in and set to say, you know what? This person's not going to be friends with my son until I've approved it. So we really do. I think that's really what sets us apart. And Darren, you've been doing this for 9 years. Yeah. I'm sure you've got more to add.
Certainly. So the other part of the safety is that we vet all videos. We're the only COPPA compliant app on the market right now that actually will review videos before they're posted in a very short period of time. So it gives us a big competitive advantage when parents are looking at the platform. We also teach the children how to be good digital citizens. We have them go through a course. We reward them with digital currency or unlocking assets on the platform. But I want to go back to what you said earlier. I just want to make sure the audience understands how well positioned we are as a company to grow with the growing demand of subscription video on demand services, the creative services, the animation, content. Each of these platforms need content. It's not the old days where they're scaling this through different channels. It's being visibly seen on major network cable. They're staying in a silo now. So each silo needs to be filled as they grow. We are in a phenomenal position to take advantage of that. And I think that's really the message that we want to drive home, how well positioned we are. We have wonderful leadership with Paul and Russell and 2 other gentlemen that you're going to be hearing about in the next probably 30 days have joined the team. So I just wanted to make sure we put that cherry on top.
Absolutely. And Darren, you guys put out a press release this morning. Yeah. Announcing a $1.7 million bookings win. So congratulations on that. Could you just go a little bit deeper for us and just tell us, what exactly the deal is and why it matters?
So let me back up through COVID. We were one of the few studios that was able to transition remotely, partly due to a great management team, the other part due to the fact that we upgraded technology. So we're working remotely on most of these. We were able to deliver a lot of the content that we promised to Disney, Nickelodeon, Warner Brothers, Hasbro, etc. By doing that, we also put ourselves at the front of the line where this business was coming to us. We picked up 2 new series, which I can't announce who they are because they're brand new and we're not allowed to. But what you're going to be seeing over the course of the year now from Top Draw, our one of our divisions, is getting back to pre-COVID type numbers. Additionally, with the onboarding of Russell Hicks, the former president of Nickelodeon Animation Studios, he's also going to be calling his friends, his Rolodex, and bringing a lot of new business to the table because of who he is and the reputation that we've developed over the last 22 years of being a world-class 2D animation studio. So look for big things going forward from Top Draw, as you can see in the press release, and I certainly appreciate you putting it up on the screen, that we're backlogged for about $8 million worth of business over the next 12 months. Now, there's still a lot of opportunity for us to grow that additional. So coupled with that, with the release of Santa.com, and Paul, would you mind just giving the audience a little taste of Santa.com, because it's a wonderful IP that we just acquired.
Yep,
Sure.
it's just the word Santa.com.
Yeah, that's it.
Correct.
Yeah.
It's a website. So it hasn't been. We're debuting it in Q4 of this year, around Halloween, and basically it's going to be a virtual North Pole that is a great experiential opportunity for kids and adults as well. So the visitors to the site will be exposed to curated holiday lists and things like that. And with a couple of clicks, I could tell Darren what he's getting me for Christmas this year and just have it sent to him right away. And then for the kids, there's going to be curated lists, but also there's going to be things for adults. Like, we really want to make it easy on adults this year as well. So, you know, if you're someone who's into baking and the holidays, we want you to be able to order like custom boxes with your name on them, you know, that you could send out, you know, that you could order. We want you to be able to order, you know, premium hostess gifts if you're going to a New Year's party, things like that. So it's going to be a virtual North Pole, but we're going to have a pitch and a catch here. This is the groundwork for what we hope is going to be the next big holiday special. We're going to create a holiday feature-length film about 46 minutes long called Santa.com that is basically about Santa's efforts to modernize the North Pole. So we, you know, again, a lot of this is coming through curiosity, and these guys are brilliant at that. And again, you know, Russell spent the most of his career, you know, at Nickelodeon, and he really is like well versed in how to you know, shepherd these things through. But I do want to piggyback on one quick thing that Darren said earlier, and that is just in terms of the subscription video on demand and our animation. So we have an animation studio and we have original IP. If you look at the calendar year 2020, the one standout out of any industry was Disney Plus, right? Yep. And that served as a wake-up call to all of the other subscription services that if you want to attract subscribers and you want to retain the ones that you've got, one of the big ways that you're going to do it is to be competitive with Disney with kids and family programming and content. We want to be a pipeline for that content.
That's right.
Excellent. Gentlemen, anything else that we haven't touched on that you want to make sure we get to today?
Go ahead, Paul. If you
yes, I do want to say, you know, I mean, I can't get into great detail here, you know, right now, but the examples that I'm using, Baldwin, Santa.com, and, you know, the Dynamite Publishing, all of these are just the tip of the iceberg. We have a number of projects that are in development right now, and a number of partners that we're going to be working with to really bring these things to life. So we're very excited about GROM. We're grateful for the opportunity to be here with you today. And we also just want to, for people that don't know GROM, now is a really good time to look at us because we are on the precipice of something really big.
Well put.
Awesome. Darren, Paul, I appreciate you guys taking the time out of your day to hop on with us today. And again, big press release that went out this morning. Congratulations.
Thank you so much for having us.
Appreciate it.
Absolutely. All right, guys. There's an interesting one. I promised you guys we're moving fast today. Okay, this is not the day to screw around. I woke up on the serious side of the bed. We're just getting into it. So if you're just joining us, guys, we talked about some trade ideas in the NFT space at the top of the show. We then took a look at Roblox, which we're sitting on the sidelines of. We tried to sell some puts in Palantir. We ran into a brokerage issue. Let me try one more refresh and maybe nope. Palantir's getting booted to tomorrow.
What's going on with interactive brokers, Luke?
I don't know, man. Maybe I shouldn't be a shareholder.
Luke, look how weird this is. So you can see me right now, right? Look at my shirt in person and look at it on screen. It's like a whole different color.
Yeah. Producer AB is wearing a green shirt, guys. It's green, okay?
It looked gray on screen, though. You wouldn't know.
I know. That's sort of wild. But all right, AB, what'd you think of GROM? Super interesting. Somebody saying press the trade button. I need to see an options chain. Sorry, guys.
All I know, Luke, is that if I were, a little bit younger than I am, I would eat up that Santa.com. That site looked really cool.
The Santa. Okay, yeah. So here's what I thought was some of the takeaways I thought were interesting out of that GROM interview. All right, this is the idea show. So Santa.com, that's on the horizon. We also got the tease of 2 new team members that are going to be joining, and 2 new series that they're going to be announcing out of the digital studio. It's sort of like a Genius Brands is what it was reminding me of as we were talking to them.
Agreed.
So,
yeah, I was thinking about that too. The similarities between Genius, and then we've talked about Curiosity a lot on this stream before. Ticker CURI. So I want to check Curiosity back out again, see how they're doing.
Yep. All right. And since I can't get my Palantir option chain to load, and producer AB, I know that you've got a big interview in a minute here. I'm gonna call out to Zinger Nation. Christian Gallagher, out there in the chat, give us a Palantir put trade. All right. I wanted to hit it. I can't load my option chain, so I've got to punt it to tomorrow. So it's a reason to subscribe at least. I didn't do that on purpose, but hey. Hit that subscribe button, hit that like button. But Christian, I know that you sell puts against the stock, so if you have a trade queued up, let's hit it. And number 2, producer AB, anybody who was listening yesterday, I made them some money, all right?
On which trade?
What was the one stock I went on like a 20-minute rant for yesterday? On a bullshit downgrade.
Not Roblox, because that's one that I lost money on Roblox.
Starts with a T.
Next, Tiger. Yeah, Tiger Brokers.
Boom. All right, we're getting some retribution on Tiger, guys. This is as you can think about it as the Robin Hood of China. Yesterday, the stock was down 7% on us. It got a sell rating from Goldman Sachs, but the price target was above where the stock was currently trading at. So they gave it a sell rating, announced a $21 price target while the stock was trading at $18. We're like, okay, come on. That's not something that's going to kill my thesis. All right. So we stuck with it. We're getting a nice little bounce today. We're just about back to where we were yesterday. So everybody in the chat was the hater on Tiger again. I think this is one that has the potential to really take off as we get closer to this Robinhood IPO. That plus the upcoming earnings results, those are the catalysts I'm holding it through that Goldman downgrade. And we're getting a nice little pop on that today.
Yeah, I mean, I think Tiger's really interesting here.
And we got a good ticker in the chat we've never talked about on this show either. Producer AB.
RMCF Romeo.
You know what that is? Rocky Mountain Chocolate Factory.
Ooh.
Chocolatier, our publicly traded chocolatier.
Spencer's saying he thinks it's Cold Stone too.
I don't know if it also owns Cold Stone. Let's look. I don't see it. I don't think so, Spencer. Israel. Chart looks beautiful. I've never looked at the stock on a fundamental basis before, but the chart looks pretty strong. I mean, we were just coming out of all-time highs a couple days ago, or at least 52-week highs. They're not all-time. I'm sorry. We're coming out of 52-week highs just a few days ago. Wow, one of the few stocks that still hasn't hit their recovered from COVID. Stock is still trading below COVID lows, 25% below where the stock was at before COVID. That's interesting. And that's an interesting one. Shout out to whoever dropped that one in the chat. Let's see. Christopher Allen.
And look, Antonio's bringing up a good point in the chat as well, that this could be a wedding play. So we've heard that bookings for weddings are just off the chart after COVID. Of course, for a full year or so, people couldn't have full-fledged weddings. So now venues are being booked up. And so maybe, for desserts, catering, Rocky Mountain chocolate fills that need. So, Antonio, that's a good thesis there in the chat. But yeah, Luke, let's add this to the watch list.
It's added to the watch list. It's already on there, AB. Check.
All right, you're one step ahead of me.
All right, AB. Give us a preview. You've got a big interview coming up in a minute here.
Yeah, so we have the Pennsylvania REIT, ticker PEI, coming on. I'm really excited about that. The stock is, like I said, the ticker is PEI. The stock's been kind of beaten down from COVID, but it looks to be a good, it looks like this might be a good entry point. So I'm excited to get the company on, talk about it a little bit, see what's going on. Really exciting things over there in the REIT world. So if you're looking into some real estate investing, this is your place. And then, yeah, I'm going to bring Spencer on to help me with the interview as well, Luke. So, all right. We'll be back next week.
Make sure you follow producer AB on Twitter too. It's important.
That is important. I'll drop Luke and I's Twitter in the chat. Oh, you'd already dropped yours. I'll drop mine in there as well.
I already dropped yours in too.
Oh, beautiful. Thank you.
All right, take it away, AB.
Christian, the second interview is PREIT. That is ticker PEI. Let me go ahead and Spencer, my man.
What's up, everyone? How we doing? What's up, AB?
I'm pretty good. Just hanging out. I'm gonna go ahead and leave you to it, so I don't get into your audio. We're sitting pretty close together for all y'all out there in Zinger Nation. So that's why you might see Spencer and I hopping on the unmute. Trying to not give you guys some feedback. No, Christian, we will have a show tomorrow. I heard Luke might have a dentist appointment at the time of the show tomorrow. So Luke will be back on Monday.
Okay, so yeah, we got booted from our usual studio, which is why AB is off where he is. But I'm very interested in having more real estate exposure in my portfolio. So I am keen to talk right now to our next guest, Joe Coradino, from Pennsylvania Real Estate Trust, ticker PEI, as Aaron Bree just said. I'm going to bring Joe on with me now. I'm going to get AB off the screen, and I'm going to bring Joe on. Joe, good afternoon. Thank you for joining us.
Good afternoon. How you doing?
Doing great. I want to ask you about this. You just had a press release out, or it was this anchor releasing program. Explain that, because I was reading into that a little bit, but I'd rather just hear it directly from you.
I mean, essentially, if you look at the sector, the mall sector, you'll see that there's been significant anchor closings, either through bankruptcies or just downsizing their store count. Many of our peers have significant anchor vacancy. We were on the forefront. We filled nearly 20 vacant department stores with over 3 dozen tenants. So we've enhanced the credit quality of the tenants coming in. We've enhanced the traffic they're driving. They're more high performance tenants. And we've also improved our rent that we were getting out of those boxes. Typically, a department store pays, cents per square foot to $2 or $3, and we've driven average rent north of $20 a square foot in those stores. So it's all good news that we've got our anchor boxes in our core portfolio leased up and soon to be occupied.
Okay, for people that say, the local mall closed near me, or malls, really? Do I really want to own malls? Explain the bull case for why mall real estate is why you believe in it.
Well, you don't want to own all malls. You want to own good malls. It's really
that certainly makes sense.
It's as simple as that. And we were really proactive going back, 7, 8, 9 years ago. We sold off about half of our portfolio. We exited about 18 of our 40 or so malls that were all in tertiary markets. Today, we sit with malls primarily in places like Philadelphia, where we have 7 malls, DC, where we have 4 malls, and our other malls are in, really market dominant positions, military towns, etc. And, as a result, we've got a portfolio that we think is one worth owning.
Yeah, I mean, a lot of your malls are in like Cherry Hill, New Jersey, for example, like the dominant suburb in there, suburb of Philadelphia, but like the dominant suburb in the central suburb in that area, right? Grand Rapids, same thing, like smaller city, right? The dominant town in that area. So the underlying philosophy is looking for high population density places, and what else goes into a good mall?
Well, I mean, first off, I mean, it's population density, it's income, it's job growth, etc. All of those are underpinnings of a good, good property, a good mall. But even having said that, what a mall is changed dramatically in the past few years. We were, typically a place where people shopped. And today we're a place where people shop, dine, get entertained, sometimes receive health care. We're adding apartments to our properties, multifamily. So as a result, the whole makeup of malls, health, fitness, etc., is changing, because the one characteristic of real estate that we've all heard the 3 words, location, location, location. Malls are really located in excellent areas at intersections of major highways, and as a result of that, getting people to occupy space in there, be it a typical mall tenant or not, is not that difficult, because everyone wants to be in a good location.
So where are you and your properties in this recovery? I pulled up, a chart of PEI earlier, and you can see from that, obviously we're well off the lows from last year, but still a ways to go from where we were before the pandemic. So where are your properties right now on this recovery timeline?
Well, if you look at, if you do a comparison, and I want to eliminate comparing back to 2020 because it's pretty easy to compare positively against that.
Right.
But if we look at 2019, we've leased over 150% so far this year of the space we leased in all of 2019, key indicator. The other thing is that while traffic is about 90% of 19 traffic, sales for May as a sample month, we don't have June sales yet, are 14% above May of 2019. It means that people are really shopping with a purpose. And so we feel really bullish, to use the word that you used to open the session. We feel real bullish about where our properties are going right now. People are shopping, they're dining, they're going to the movies again. We're fully open and doing business.
I'm curious, like, if you, I don't want to dwell too much on last year, but like at the worst of it, how low did your rent collection get? I'm curious.
Well, and we've been public about this. We hit in March and April around 20% of our rent collected. But the good news is that as we came out of that and we negotiated with our tenants, we're pretty pleased to say that through a rent deferral program, etc., that we will collect about 80% of the COVID period rents. So we feel like we've come out of that pretty well, and now we're back to relatively normal collections. and have been for several months.
You spoke earlier about malls just not being a place where people shop anymore, right? There's a number of things someone in the chat said, the mall by him is rumored to be become an Amazon fulfillment center, right? There is a number of things you can do with this space. Can you speak a little bit more to that about just the diversity of things maybe that I wouldn't think about, right?
I mean, when you think about, we were typically a pure retail play, if you will. We were looking for, traditional mall stores. And when you think about a mall today, we sold a former Sears store to a health system that will open up in about a year and provide outpatient care, right? Yeah. We have fitness centers in our properties. We're in the midst of adding upwards of 7,000 apartments to our properties. We're adding hotels to our properties. We're adding senior living to our properties. We're bringing in, in addition to what was a traditional full price retail, we're bringing in a lot of open air tenants that are off price. We're bringing in office space. So the mix is very, very broad. With the core still being that retail, and of course, one of the keys to our business is dining and entertainment. Added a number of restaurants, a number of entertainment concepts, and we'll continue to do so.
I was waiting for you to say senior living because I've been reading about that, how more and more real estate is being gobbled up, whether it be malls or former malls or whatever, and it's being developed for the purpose of senior communities. So I was very keen to hear you say that because that seems to be a thing. There's certainly a never-ending supply or demand, I should say, for that. So it makes sense on the surface.
Well, I mean, you're seeing a graying of the population, so right. As a result of that, we think our locations are well suited for that, as well as traditional multifamily housing.
Yeah.
So again, it's it's all a whole blend of potential uses that now are consistent with operating on a mall property.
So what is the next catalyst here? Because I say we're reopening, but we pretty much are reopened, at least in the U.S., right? I mean, and it's been that way for several months now, and it's summer and people are out and they're doing things and restrictions are pretty much lifted. It seems to me we're mostly back to normal, even in our office building, that everyone started coming back in now, as of this week. So what is the next catalyst? If we already are reopening or reopened, then what is the next catalyst for you?
Well, I think it's just people continuing to be comfortable. I mean, if you look around the country right now, we're at about 60, plus or minus % vaccine. And so you still have, some people that are hesitant to get out, shop, dine, go to the movies, etc. That's changing. It's changing every day. I mean, as we look at our numbers, and we have pretty accurate numbers. We count all the people that come in our malls, and we're seeing that number continue to rise as people get more comfortable, as people get vaccinated. More people get vaccinated. And I think generally it's just a beginning, a return to normalcy, if you will, is taking a bit of time. I mean, you say your office building is occupied. The one I'm in right now is probably about 20% occupied, 25%. So there's still in particularly the older eastern cities that were the last to reduce the restrictions. I mean, we didn't really get all of the restrictions released until early July in in Philadelphia and South Jersey.
I mean, I talked about our building. So our building just, it seems like I'm not quite sure, but it seems like it just reopened this week, this past Monday, and it's definitely not even full yet. But you can tell people are coming back in.
Oh yeah,
more people are coming back in. So maybe, like you said, it is more of a, even though the restrictions are lifted, it may be more of a gradual process. To your point. So
yeah, I think it will be, but I think it is occurring. And again, one of the thing that we like is that while we're at 90% traffic, we're at 114% of sales, because ultimately that's the key. That's the real barometer of the success of our retailers, right? Is what sales they're doing. So we're seeing people spend more each visit.
That's interesting, and there's so many things that go into that, right? Because you've got the strength of the consumer. Apparently, everybody was stockpiling cash during the pandemic. You've got inflation going on out there, so there's the competing dynamics. But you're saying you're comparing it against 2 years ago, right?
Yes, I'm going back to 19.
Yeah.
I'm not comparing to 2020. It's too easy.
Right. Well, I'm glad you agree with me on that. I've been saying that this entire time. I'm sick of these year-over-year comparisons. They mean nothing, right? They mean nothing.
Right. Everybody's going to outperform last year,
unless you're a company like Palantir or Zoom, in which case you're not. But
right.
Yeah. Thank you. I'm glad you acknowledge that. Joe Coradino is the CEO of the Pennsylvania Real Estate Investment Trust. PEI is the ticker. It was up on the screen. There it is now. Joe, any final thoughts before we go, as far as like the state of with the real estate sector? The sector overall was one of, I think, if not the leader in the S&P in the first half of the year. If you look at like the XLRE, for example, which I'll bring up right now, it's been a strong start to the year for the real estate sector of the market. And any thoughts on that?
I just think there continues to be upside in our sector. Again, the way to invest in quality real estate, quality malls, is to be in the REIT space, right? And so I think there's continued upside as we recover, as we continue to transform our assets and bring in those additional uses I spoke about. And a way to ride that is to be in REITs.
All right, Joe Coradino, Pennsylvania Real Estate Investment Trust, PEI. A pleasure to have you on the show. We'd love to have you back on later in the year and see how things shake out from a real estate standpoint.
Thanks a lot.
Thanks a lot, Joe.
Good day.
All right, you too.
Take care.
All right, that was Joe Coradino, Pennsylvania Real Estate Investment Trust. PEI is your ticker, and that was. I need more real estate, guys. I need more. I've got one REIT ETF in my portfolio, and even that, it's like a tech focused REIT ETF. It's like it's SRVR. It's all like data centers and stuff. I'm interested, especially when you look at like PEI, for example, right? I'm interested right now. I'm more interested in the ones that haven't come all the way back, right? Like it's hard to look at XLRE, which is just the whole sector, and like because look, we're back to where we were pre-COVID, right? We're above our pre-COVID levels. And so you look at that, and your first thought is, "Oh, but I'm chasing." Look at a PEI, for example, and you don't think you're chasing. Yeah, we're off the lows, but we got a ways to go to get back to where we were pre-COVID. These kinds of charts, I would rather take a shot on that than I would on a chart that had come all the way back. Right,
Spencer, were you a New Jersey kid that hung out at malls a lot?
I went through a phase. Yes, I did go. I mean, why do you say New Jersey kid? Because we have a lot of malls in Jersey. Yeah, I went through a mall rat phase. Everyone did, I thought.
Isn't that a thing that New Jersey has a lot of malls?
We do have a lot of a lot of malls. It's like more malls per capita. Yes, we got
and gardens, right?
I don't know about that. But yes, I did go through a mall rat phase. One in the chat, if you went through a mall rat phase. Of course,
I think everyone did from like 13 to 15.
What else is there to do?
When you're like old enough to be on your own with your friends somewhere, but you you're not old enough to actually drive to like do things. You just get dropped off at the mall by your parents.
Actually, the mall in my hometown is not. I don't think Joe would call that a good mall. That is not a high value mall at the moment. It's been on a slow and steady decline. Like it's interesting to see how like certain malls slowly die outright, and other malls just like get bigger and bigger and bigger, because there are a couple malls, at least near where I grew up, that the malls are just getting bigger and bigger and like more new stores, and like malls like from my hometown are just like dying, right? So it's just a case of like the big get bigger and everyone else dies, which I guess is emblematic of our entire economy. So
I mean, yeah, you can see that yesterday on the S&P 500, which SPY was up yesterday, I believe, or closed, I think, barely up yesterday. And I saw a thing on Twitter that I want to say 430 out of the 500 companies in the S&P 500 finished yesterday down, but the S&P as a whole finished up, which just shows you that those top 70 companies, how weighted that is.
It's not even it's the top like 5. It really it's the top 3, because I did the math this morning. The top 3 holdings in SPY, which are Apple, Amazon, Microsoft, make up I think about 15% of the whole fund, right? The whole index. So three companies are driving the ship here, right? And it's the big get bigger. Everyone else dies. So
but Spencer, I want to get over to the big story of the day. Is AMC back? Is AMC back? AMC at last check, what is that, up 6% right now?
Like nothing goes straight up or straight down, right? Obviously, I thought we knew this, right? I mean, look at the big green candle from last week. What day was that? Was that Thursday? That was a week ago. That was exactly a week ago. Huge green candle name.
You see this as just a little bounce in what's going to be a continued downtrend. Is that what you're saying?
As much as I mean, it's hard to argue with that. I don't know if I want that, but it's hard to argue with the chart, right? I mean, someone help me out here. It's hard to argue with it. Nothing goes straight down. We even on days when AMC was ripping higher, look at that big fat red candle right there on May 28th, right? Nothing goes straight up or straight down. So I think it is way too soon to tell. Could AMC be back? Yes, but you know what it'll take? It'll take several days of going sideways. That's what it will take. Give me 3, 4, 5 more days of hanging out at 35, 36, right? Give me that. Then
Spencer, if right now I gave you say $500, $1,000 to make one YOLO trade, what would you buy?
One YOLO trade, I would I would buy puts. No, I would sell calls on like L brands. That's what I would do. I would sell calls on one of the, as much as we just talked about malls coming back. I could get behind that, but I can't get behind some of these mall-based retailers, like the individual retailers, specialty retail, right?
And L Brands owns and operates Victoria's Secret, and who are they? They have a couple different brands.
They're spinning off Victoria's Secret, but it's Bath and Body Works. You can look, or like American, like who wears Abercrombie and Fitch? Sorry, maybe if you do, I'm sorry, but like who still wears Abercrombie and Fitch? Okay, I would sell calls on Abercrombie and Fitch. If you gave me $1,000 to do whatever I wanted, I would sell. That's what I want to do. I want to bet against all these like specialty retailers.
So Abercrombie is actually kind of interesting because they've been going through like a rebranding. They're trying to upheal their whole brand. So they have new clothes out now. I actually was at a mall the other day and we walked into Abercrombie and it was very.
Wait, who owns Hollister? Is that Abercrombie? I think
yes, or at least they did.
Who wears? I haven't worn Hollister in 15 years.
Well, that's what I'm saying. Is if you walked into an Abercrombie store right now, Spencer, you'd be shocked. It's completely different than if you went into one 10 years ago. It seems like they're trying to be more of like a Urban Outfitter. Their clothes don't. How they used to have like the big logos across the chest that would say Abercrombie. All that stuff. It's not like that anymore.
Everybody hates that.
Yeah, now, but that was the style back in the day.
Yeah, you're right. Yeah, actually, speaking of malls, when I was like, I think when I was like a freshman in high school, our mall got a Hollister, and on Monday at school, like half the school was wearing Hollister.
Did they
Everybody went to that store over the weekend.
at the mall where I'm from, they used to have a guy just standing outside the Hollister, with his shirt off. That's actually what Luke used to do in high school, was stand outside the Hollister with washboard abs and just stand there and look good.
Yeah, that's it. All right. So, what would you do if I gave you $1,000 to YOLO any trade? What would you do?
That's a good question. I would consider buying calls on one of these stocks.
You can't steal my idea. That's my idea.
No, I say buying calls on.
Oh, buying calls.
I would go with either something like Wish, AMC, something that has the potential to run up like 10% in a day.
Yeah, all these like AMC and Wish, like that's the thing. Is like AMC is up 6% right now, but it's liable to move like 20% in a day. And that's why I would never.
I would pick something, Spencer, that I would think would be very volatile. Like, and this is just what I would YOLO. So if you gave me $1,000, it's not mine. I'm playing with house money. I can do whatever. I would consider doing something like that. I do like what we talked about earlier as well, as far as selling puts on Palantir. I think that's a great way to just raise some capital. And Palantir has been kind of stuck in this range for a while, so I don't know. I would feel pretty good that it's not going to drop below like a certain level. And if it did, then you can pick it up at $18, $19, whatever it is. But yeah, back to the malls thing, hanging out at the mall. I saw an article about kids in Europe, like in England and stuff, have been hanging out at the airports. Like they'll get dropped off at the airports and just hang out because they have, I think it was during COVID when nowhere else was open. And they would just walk around the airports and go to the, bistros and stuff that they have in there because the malls were closed.
We can't do that in America because you have to get through security. I guess you could. Wait, but what? I don't think we.
No, I don't think we could do it here. But there, overseas, it was okay. Oh, you're looking at Macy's right now.
I just pulled up any old one.
So, so Macy's just got back to its pre-COVID levels.
Yeah. Well, yeah. And let's zoom out on these. Like this is why I can't get excited about anything. Like I could get behind the idea of a general comeback in foot traffic overall, but to think that any one retailer is gonna, is not gonna suddenly, the trend will suddenly change, right? And the trend that was the trend for the last 10 years on American Eagle, right? Not 10 years. Well, yeah, I mean, yeah. Look at the last 10 years.
Oh my Lanta.
Right.
What about Spencer? Have you checked in on any of like the beauty supplier companies? So Sally's,
like Ulta,
or Ulta.
Yeah,
have been really strong the past, really since COVID.
Yeah.
What about? I think it's just Sally's. I don't know what the ticker is, but if you type in Sally's, it might pop up.
I know. SBH. There we go.
So if you go in on the last 6 months, these have been really strong. Maybe the last month or so, they've kind of slowed down a little bit.
Hey, Bill Strangler is calling me out. It was a hypothetical situation, Bill Strangler. I don't actually know how much money I would need to sell some calls. I don't know what the calls are priced at. It's a hypothetical scenario. All right, AB, it's 1 o'clock though.
All right, I'm gonna hop off. You want to hang out here for a second while I get Neil situated?
Yeah, we got Get Technical with Neil Hamilton. Somebody asked where Neil went. What happened was Neil went to a farm upstate, and we thought he might be gone forever, but no, he came back. He came back to us actually. He came back. It was a plot twist. And the never-ending story that is Neil Hamilton. So, Get Technical live right now. That's a wrap for the Power Hour today. Thanks to our guests. Thanks to all of you for hanging out. Please remember, you know what? I don't always check. Can you guys tell me, do they always say the disclaimer at the end of the show? I try to make sure they do, but I don't always check. Anyway, disclaimer. There it is. Please remember all the information from our show is meant to be used as informational purposes, not for investing or trading advice. Dave, I know that's what happened to all of our dogs, and that's what happened to Neil too. But he found his way home. It's a miracle. I don't know how it happened. All right, I'm out of here. Get Technical is on now. Crypto shows after that. Chance trades. Zinger stock trivia at the close. Cannabis Hour and After Hours of Rye Rose Biani is our schedule for the rest of the day. You guys are funny. I'm going to hop off. You guys are hilarious. Let's see what Neil's up to. What shenanigans are going on over there?